My HOA will be putting a lien on my house and then starting the foreclosure process. Story time. I bought a house in May of 2024 and my house is in an HOA. Now, when I bought the house, I didn't know of any issues or any work that needed to be done on the property. Everything was great for the first few months. And then in March of 2025, this year, I was notified that there was going to be work that needed to be done on all of the properties and my portion was going to cost $23,000.
Guys, tell me why my mortgage went from, don't judge me here, $3,200 a month to $5,600 a month.
I really thought that if I paid my mortgage payments in full and on time every month, that I wouldn't lose my house. That's not exactly what's happening. Our escrow analysis finally came the morning of my 40th birthday. I'm in the bed drinking my coffee at an antebellum home in Natchez, Mississippi, and I get an email. And I'm like, I shouldn't open this like on my 40th birthday, whatever. But I've been waiting for it. I didn't think it was going to be anything. I thought it was going to be like no big deal, like no change. I open it, $3,700, second year in a row, shortage. Our mortgage payment will now be $2,700 a month, which is $600 more than it was supposed to be when we took out the loan. Isn't that fun? Yeah. I can't pay it. I mean, like, we can't pay it. It's insurance. Our insurance is going up $400, annually. So I called my insurance agent today and she was like, okay, so that was last year, because like they did that like for the previous year. So she was like, okay, that was last year, but I did get yours a couple days ago for this year, the renewal, and it's going to be going up another $300 this year. If it went up $300 last year and we're at $3,700 shortage, even if like I pay the shortage in full now to keep the thing the same, the payment the same, we're just gonna have another $3,700 shortage again next year because insurance is still going up again, $300 again. I'm calling the mortgage company tomorrow. I'm depressed, like, obviously. I'm unmotivated to do anything. I'm not getting things done. I need to call a realtor to find out what needs to go on because like June 1st is gonna come and like I'm not gonna have $2,700 to give them. I mean, I'll have to. I don't have a choice. Like I pay when I have a payment due, I pay it 100% in full on the due date, no exceptions. It will be paid. Period. Then I'll have to pay for like all the selling the house junk, like fixing anything, and might have to sell this beautiful house and get a smaller one. When we bought this house, like our first house that we lived in for 10 years, my last payment on that mortgage was less than $1,000. So I don't know if you have any comments or, nice, mean, whatever, or like what, I don't know, what can I do? Tell me what to say to the mortgage company. Tell me what to say to my insurance agent if I have to talk to her again. Tell me what to say to a realtor. I don't even know what realtor I'm going to use. Have you ever experienced anything like this before? Do your thing, TikTok.
So something life-altering has happened to me and my family, and I've been debating about whether I want to talk about it or not, but I just saw a TikTok of a guy that went through the exact same thing. The only difference was, in my opinion, it's worse for my family than what he went through, but I just saw that like he got through it, and so I'm going to go ahead and share my story. And the huge reason why I also didn't want to share it is because it's embarrassing, and I know it's like our fault, and we should have done our research, and we should have known better. So the blame is on us.
Homeowners across the country are slammed with unexpected expenses in their mortgage payment, taxes, insurance, and many are about to lose their homes. In fact, many have already lost their homes. Your mortgage is about to explode, and no one warned you. Taxes, insurance, and escrow are draining homeowners nationwide, young owners and older owners. What's your situation? In this video, let's see what is happening and what could be done to prevent expensive payments or even to prevent from losing your home going into foreclosure.
She made that decision after seeing an unwelcome surprise she wasn't expecting in her property tax bill.
Yeah, her property taxes climbed well above 100%, and now she's been priced out of her home. And we also spoke to an attorney who says there's a specific reason buyers are facing this challenge more often.
Your loan may be fixed, but your escrow isn't. property taxes and insurance can surge, especially after refinancing, renovations, or new assessments. This is how homeowners are being blindsided.
It is definitely a buyer beware type of a situation.
Michael Finn is an attorney based in St. Petersburg.
Values have soared in Florida, particularly anywhere near the water. And somebody that bought a house 5 years ago may realize a value increase of 2 to 3 times. You can dispute it, but you're not going to win a significant decrease because
Has your property tax and insurance and other costs gone up like many others? This is happening all over the nation. And you may think that, hey, I bought my house 5 years ago or 20 years ago. It's affecting people even who bought long time ago, especially boomers or seniors. They have fixed income and they've been paying their mortgages, principal and interest, which is fixed for the last 10, 15, or 5 years. Now what's happening is all of a sudden, as home prices surge, as the renovation costs surge, as the assessments values surge, the county assessors and the states are increasing property values and property taxes significantly. Some states double, triple, quadruple. So what's happening is if I'm a senior in Florida who bought my house 10 years ago and had a payment of $2,000, I'm seeing payments of almost $3,000, and these seniors or people with fixed income cannot afford it. I'll give you my own example. I've been in my house for almost 25 years or more, and my property tax has jumped. Although I'm in California, it's still increasing because we have a limit on how much it increases. But my insurance, not only home insurance, but my earthquake insurance, my content insurance, my auto insurance, 2 cars have jumped up almost 20, 30, 40% in the last couple of years. So I'm seeing it myself. Not only that, especially when we take examples of Texas and Florida, Nebraska, a lot of states where there's hurricane disasters and other natural disasters, their insurance has skyrocketed significantly, double, triple, quadruple. But with the insurance going up, all the people who have homeowners insurance, especially condos, high rises, and high risk condos near the beach or near the hurricane area or other disaster areas, their HOA has significantly gone up. So not only has property taxes gone up, insurance has gone up, and HOA has gone up significantly, but add to that any repair work that you have to do because of the tariffs, because of inflation, because of everything going up. Just to fix, I just called a garage repairman. He was here for 15 minutes, fixed the sensor, cost me $99. So I'm feeling it myself, and a lot of other people are feeling the cost of owning a home, cost of living in the United States today. So it's a significant impact, and a lot of the homeowners who had payments are now all of a sudden panicking because the payments are significantly higher than what they thought they were going to pay when they bought the house, whether it was 2 years ago at lower interest rates or even 7% interest rates, or you bought your home 5 years ago, 7 years ago at lower interest rates. It's affecting everybody, each and every homeowner out there. The other way this cost rises, massive cost rises, insurance, HOA, taxes, repair costs, is also affecting a lot of homeowners whose homes have been paid off. So what happens is you still have to pay property tax. I know owners in Florida that have paid off their home 5 years ago, but struggling to make a living because their property taxes has skyrocketed, their insurance has skyrocketed, their HOA is skyrocketed. With the hurricane disaster, a lot of them don't have any money, and even if they had the money to fix it, they can't afford it because it is very expensive. Furthermore, a lot of the homeowners, especially the ones that have been there a long time, own their home. They are very equity rich, but they are cash poor. They have a lot of money in the equity, but they cannot have any cash to fix it. They don't have any cash, and they are not able to refinance or able to pull out a HELOC loan because their credit may be bad or they don't have enough income to pull out money. So it's a sad situation what's happening right now, and we're just seeing the start of this bad situation getting worse and worse. Tell us if you or if anybody you know has been going through this situation or what's happening in your local market. We sure like to find out what's going on out there. Have you seen news or have you been hearing about foreclosures coming up? Even though it's a very small amount, the number of defaults, pre-foreclosures, and foreclosures is increasing significantly. Let's look at this chart. It shows the top 5 major metros with most foreclosures filings in Q1 of 2025. And this is no surprise. We have Houston, Texas, we have Miami, Florida, we have Chicago, New York, and Philadelphia. Furthermore, if you look at this chart, it shows that U.S. foreclosures rise in quarter 2025. Here's a report from the National Mortgage Professionals. Foreclosures up 11% from February and 9% from a year earlier. Foreclosure activity across the United States increased in the first quarter of 2025, following 3 consecutive quarters of decline, according to a report released April 10th by Adam, a curator of nationwide property and real estate data. A total of 93,953 properties had foreclosure filings, including default notices, scheduled auctions, and bank repossessions from January through March, an 11% increase from the previous quarter. This is amazing, and one of the biggest reasons, of course, there's unemployment and loss of jobs and other issues, but the biggest reason is because this rise in expenses that I talked about earlier, tax, insurance, HOA maintenance, is creating a havoc for many of the homeowners, simple, innocent homeowners. And the funny thing is, it's not just buyers who feel this. If you're selling, understand the new buyer's tax bill might kill the deal and the insurance as well. And if you're remodeling, your property taxes might double or go up significantly. This affects both sellers and owners right now, and the situation is getting worse. There are many homeowners who are regretting buying a house or sick and tired of skyrocketing costs. They want to sell the home, but they may not be able to sell the home. In fact, I did a video. It's called Homeowners Cannot Afford to Sell a Home, nor can they afford to keep the home. So what's happening is, if I'm in a situation where I want to sell the home and I have a lot of equity in the home and I want to move to a smaller house or a bigger house, I can't sell my home because if I have a 2 or 3 or low percent, I don't want to buy a 7% loan and I may not qualify. On the other hand, a lot of the homeowners cannot afford to keep their home, especially the homes where there's been damage, natural disasters, other disasters, and they bought home that needs work. They don't have the cash in hand to fix the home or to upgrade the home. So on one hand, they can't afford the high mortgage payments, the high fixing cost, and they're struggling to stay in there, and they cannot afford to sell either because they cannot qualify to buy a house, or they don't know where to go, or they may not be able to afford a house because the prices are high and the interest rates are high. So it's a dire situation right now, and it looks like it's going to get worse. The other thing that is happening quietly but surely is that there are more and more homes up for sale, taking longer and longer to sell. So what's happening is, even if I wanted to sell, like a lot of home sellers in Texas and Florida have their house for sale for 3, 4, 5, 6 months and cannot sell it, they have to reduce the prices. So on one hand, the sellers cannot sell their home, they cannot afford to keep their home. And on the other hand, the buyers who really want to buy their home, a lot of the buyers cannot afford to buy homes. The reason is because homes are expensive, inflation has gone up, interest rates are very high, so a lot of the buyers who want to buy a house are priced out of the market. Let's look at this chart. According to Redfin, the U.S. housing market has nearly 500,000 more sellers than buyers, the most on record. That will likely cause home prices to fall. So you can see there is a slowdown coming in. Furthermore, when we talk about home affordability, here's a report from NAHB. It says that nearly 60% of U.S. households unable to afford a $300,000 home. Now, here's the funny thing. The national median home price in USA is about $430,000 right now. It could be $420,000, but let's say it's $400,000. But the sad thing is, 60% of the U.S. household cannot afford a $300,000 house, let alone a $430,000 house. So all the homes that are $400,000, $500,000, $600,000, $700,000, there's not a lot of enough buyers for there. So this is a real scary situation. Sellers are maxed out, buyers are maxed out. They're getting priced out by taxes, escrows, and fear. If you don't price your home right, it won't move. And if you're not strategic, you're leaving money on the table, or worse, sitting stale and not being able to sell.
Listen to me. I will never be able to afford a house. I will never be able to afford a house.
Home prices are rising nationwide as inflation remains stubborn and mortgage rates remain high as Americans compete for fewer available homes. Home prices in March were up 0.4% compared to February. Now that's the second month in a row that we have seen gains.
My parents' house that is $195,000 back in '96 is now worth like $500,000 to $700,000. My children will never be able to have the life I live because I can't afford to do it.
I don't think any of us thought when we were growing up that owning a home would be a luxury. Like maybe we thought it would be a bit difficult, but not like a luxury that basically only the rich will be able to afford.
No one that works a full-time job should be facing homelessness. And that's what my family is facing right now.
Being completely radicalized by the rental housing market right now, I cannot believe that you can pay over $300 in non-refundable fees just to apply for an apartment.
A big part of the reason why social life here in America is getting more and more difficult has to do with the fact that nobody can afford decent housing.
Everybody in America kind of knows, like, it's over. Like, there will be no recovery. Like, this is not like the other times. This ain't like 2008 where, oh, we'll crash and then we'll get back up.
Because right now, this economy, this world is set up to make average American families fail.
Are you struggling with higher than expected cost that you did not anticipate and now you cannot afford it? What can you do about it? Well, there's several things you can do about it. Number one, if you have an escrow account where your principal, interest, tax, insurance is paid through an escrow, talk to them and see if you can adjust it. The other thing you can do is if you're paying high property taxes in some states, you could appeal the property taxes. Call your county assessor's office and appeal the value of your home. If you feel the value of your home is $400,000 and they're assessing your home at $500,000, you can do an appeal. Call your local realtor, contact me and I'll refer you to a realtor and they can give you a comparative market analysis, the value of your home, and you can dispute that. So this way you can save property taxes no matter how much you can save. The other thing, if you have high insurance rates, and I'm sure most of us have high insurance rate, is start shopping around. Don't get bullied by your insurance company. Get a quote from 2 or 3 decent, strong companies and show them your insurance previously and currently and see if you can drop it. $100 a month, $50 a month, anything you can, that will really help. So that's one way to drop your payments significantly. You may also want to cut your other expenses. It's time where the economy was booming, home prices were booming, and we were all flying high. I myself have spent a lot of money playing golf, going to movies, going to dinners, going to Starbucks, and I've actually cut down. So to save $100 in insurance increase, I'm cutting back my expenses. No Starbucks, no regular dinner outings, no fancy wine, etc. So if I can save $100, that'll offset the $100 increase in insurance. I have no choice. So I've adjusted myself, and I know many of my clients are doing the same thing. If you're a senior or if you're a VA, you may want to call your city or your county and ask for any tax benefits or veterans benefits or grants that they can help you with anything, any of your payments. That's the least you can do. Also, make sure that if you own a home, you have a homestead exemption noted. This has to do with your taxes that you can save and other things. Talk to your accountant, talk to your realtor, but there are several things you can do. The situation is worse and it's getting worse before it gets better. We are entering new territory as of June today, Father's Day 2025, when I'm recording this video. I did a video a few weeks ago and I got a lot of comments. It's called Foreclosures Are Exploding. You must watch it and read the comments. See if any of those comments can help you. Let us know where you're at and what's your local market doing. We would really appreciate it. My name is Mike Patel.